Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a very strong monthly supply and resistance area. In fact, from here, all this previous move to the downside was created. Again, here, the market tested its zone and rejected it to the downside. What we can see is that the market is currently testing this exact same zone from which there is definitely the possibility to see more bearish price action being created away from this area. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, what we can notice is that this market is currently rejecting to the downside previous weekly support from which this move to the upside was created, which is now acting as resistance. Now, as the market is testing previous support and resistance, we could expect more potential bearish price action to be created away from this zone to create new potential weekly lower lows. We can also notice that in general, since we have an impulse and a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the high to the low of the impulse leg, and we can see how we had a perfect 0.382 Fibonacci retracement. The market, in fact, tested the area and immediately started rejecting it to the downside. Going down on the daily time frame, what do we see now from a daily perspective? First of all, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, from here, I explained all the reasons for which we could expect a higher high, then a correction, continuation, and rejection lower, which is exactly what the market gave us. And in the very last analysis, I explained all the reasons for which if the market was to break below the support, things would get quite interesting. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, as the market is breaking below the support, I would like to get back precisely to what we were speaking about in the previous analysis, which is the fact that this area is very strong weekly demand and support. In fact, every single time that the market tested this area, it rejected it to the upside quite aggressively. So in a situation like this, if we will have a successful break below the support, all this previous support would become resistance here. So if we get the break below the support on the retest of this previous support turn resistance, this is where we would have very good probabilities inside of this area for a potential reversal lower, because inside of this zone, we would have very good probabilities to see more potential institutional shorting. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for gold, what we can see is that with the last reports, net positions have been decreased. We went from having 195k net positions all the way down to having only 160k net positions. What this shows is that institutions have been moving to the bearish side of gold, therefore shorting gold. And this means that if the market will retrace to this area, which is very strong previous support and resistance, there is the possibility to see more institutional shorting inside of this zone, further increasing the probabilities to see a potential reversal away from this zone and to see more potential bearish continuation. So if we get the break on the retest of this previous support and resistance, how we could be approaching a potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open an account with them and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is a button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. At least go and check it out at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.